Hi guys, welcome back to my channel. I made this video because one of my viewers asked me to do the AMC stock analysis as it is currently trending. I have started this channel last month and I'm currently making bi-weekly stock recommendations and release new trading related videos every week on Sundays. So if you like my videos, please don't forget to subscribe. Okay, without wasting time, let's look into the chart and analyze from both buyers and sellers perspective, which is very important for this stock. So firstly, from the perspective of a buyer, if you look at the 5-day chart of AMC with 4-hour interval, you can see that it really formed a very nice V-shaped pattern moving upwards with a decent volume ranging from 30 to 60 million. The stock should hold at this price range 24.5 to 26.5 for the next couple of days with decent volume in order to see any upward momentum. If it breaks this price with a volume of at least 100 million, then the closest resistance here should be around $30 to $35 range. You can see that the RSI has dropped from 86 to 64 when the price dropped from $27 to $22 last week. Thereafter, the volume and the RSI has both creeped up a little bit. Now the RSI is currently at around 73, which is relatively high, but if the volume keeps up in the next few days, we can see an upward trend towards $32 to $35 mark easily. Although RSI is currently rising, it is not much concerning to me for this stock, as we have seen RSI climbing up as high as 95 last year when the volume was about 700 million, which was amazing. So currently with this momentum, if we can get the volume high and consistent for the next couple of days, then we will see an upside momentum regardless of the RSI ticking up. So now let's look into the 6-month chart with a 1-day interval to get a more closer picture of the coming week. You can see that at the end of the March, when the volume was over 200 million, you can see a shooting star formation where despite of huge buying, the short sellers heavily shorted, rejecting the price to go up. A very nice indication for bearish momentum to follow, and this is what happened. As expected, the price fell eventually to its support multiple times because of continuous short selling thereafter. Then the short squeeze happened in the middle of July with some nice green bars on multiple days with decent volume. More recently on August 8th, on a huge volume above 130 million with strong buying, we saw a similar shooting star suggesting that the price is going to fall. However, it did pick up a nice support at around $20.5 with a decent volume over 60 million. This tells you that the buyers are not giving up and there is still a huge demand. So there could be another short squeeze yet to come, particularly because the record date for the AMC preferred equity unit dividend is the close of the business day on August 15th. However, this dividend is expected to be paid as of the close of business on August 19th. More importantly, the New York Stock Exchange has established August 22nd as ex-dividend date. So, if an investor sells AMC stock before the ex-dividend date of August 22nd, that investor will not be entitled to the AMC offered dividend on the shares that are sold. On the other hand, if new investors buy AMC stock before the ex-dividend date, August 22nd, they will be entitled to receive the AMC dividend on the shares purchased. So you can definitely expect to see a pump with high volume before August 22nd. However, in case it fails to break the $27 mark in the next couple of days, then you can expect the price to drop to $20 range easily and even further. I'll explain you why this can happen in a moment. Now let's look into the other side of it, meaning let's analyze the stock from the short seller's perspective. No one really knows how many shares have been shorted out in the last 1 year since its massive movement when the price reached above $70 mark. However, we can get a hint from this chart that there was some amount of short selling happen in last September, October, and more constantly from November until the price reached its support level of $12.9 this month. We can definitely say that in all these occasions, this price drop is definitely by short selling because it exactly reflects the short interest of the stock over this period. You have to keep in mind that whenever the short sellers borrow the shares, they borrow it with an annualized fee, just like we pay our credit card interest fees annually. They have to keep paying these fees until they return back the borrowed shares. And if you look back the short interest for the last 2 years, it has rose to the maximum in June last year with almost $7 billion worth shares available when the stock was trading at $70. Since then, this stock was heavily shorted multiple times during the last 15 months. Eventually, we saw short squeeze has started in the last week of June. One very important aspect here to learn is the fees the short seller has to pay for borrowing the shares. The red line in this graph is the fees and the blue bars are the available shares. The fees to borrow the shares was extremely low until June. Later, the number of available shares to borrow drastically reduced. Therefore, the borrowing rate has spiked to 27 to 30%. Now just imagine if the short seller pays 27 to 30% of annualized fee to borrow the shares to short, the stock should fall below 27 to 30% for them to break even for any profits, which is not that easy to do with such a small amount of available shares. Therefore, the short squeeze in this case was inevitable. And that's the main reason why short squeeze has happened. Right now, the short interest is getting back a little bit healthy as the borrowing fee is only 6.5%, which is not so bad. However, there are not many shares available to borrow, but you should keep in mind that the available shares to borrow are ticking up for the past 3 days. Literally from 10,000 available shares on August 10th to 1.1 million available shares at an interest rate of 6.5%, which is a decent play for short sellers to cover. These numbers keep changing every day or sometimes every 15 minutes depending upon the demand. If the numbers of the available shares keep increasing, the associated fees to borrow is going to drop even further, which eventually result in ending the short squeeze. However, we have to keep in mind that currently these 1 million shares are nothing when the stock is trading at a high volume over 100 million. So in order for the short squeeze to continue, the volume should really pick up in the next couple of days. On the other hand, no one knows whether the short sellers who borrowed the shares long back have already covered their position or not. Therefore, the volume is key here. If you see the volume over 150 million with more buying, not selling, then there's a high chance that the price can move until $32 to $35 range before you can expect any short selling happen again. So that's it for now. If you like my video, please don't forget to subscribe and thank you for watching.